What if I told you that a simple janitor became a millionaire by following just one investment strategy? Or that you could retire decades earlier than your peers without earning a six-figure salary? Today, we're diving into The Simple Path to Wealth by J.L. Collins, the book that's transformed thousands of lives and could change yours too. Let's be honest, most financial advice is overwhelming and confusing. You're told to diversify across 15 different asset classes, time the market, pick winning stocks, or pay expensive financial advisors who charge hefty fees. Meanwhile, you're stressed about retirement, drowning in debt, and watching your money disappear to fees and bad investments. Sound familiar? J.L. Collins, a former business executive, discovered something revolutionary. Wealth building doesn't have to be complicated. After decades of experience and making every mistake in the book, he distilled financial independence down to a beautifully simple path that anyone can follow. This isn't just theory. Collins used these exact principles to achieve financial independence and retire early, and he's taught his own daughter these same strategies. In this book, you'll discover why one simple investment vehicle outperforms 90% of professional money managers, how to calculate your true path to financial independence, and the exact steps to build wealth even if you're starting with nothing. You'll learn why debt is your enemy, how to harness the incredible power of compound interest, and most importantly, how to stay calm and keep building wealth even when the market crashes. Imagine never worrying about money again. Picture having the freedom to quit a job you hate, travel the world, or pursue your passions without financial stress. This book isn't about get-rich-quick schemes or complex trading strategies. It's about building real, lasting wealth through a method so simple that Collins explains it in terms his teenage daughter can understand and implement. This book has over 4,000 five-star reviews on Amazon, has been recommended by major financial publications, and has created a massive community of followers called Bogleheads who swear by these principles. Real people are using this exact strategy to retire in their 30s, 40s, and 50s instead of working until 65. Whether you're 22 or 52, whether you have $100 or $100,000 to invest, this book will show you the simple path to wealth that the financial industry doesn't want you to know about. Stay tuned as we break down the 4 core principles that could transform your financial future forever. And if you find this valuable, make sure to subscribe for more book breakdowns that can change your life. Let's dive in. 1. Embrace simple, low-cost index fund investing. The foundation of building wealth is investing in broad market index funds, particularly total stock market index funds with extremely low expense ratios, under 0.1%. These funds automatically diversify your investment across thousands of companies, eliminating the need to pick individual stocks or time the market. The key is consistency and keeping costs minimal, as even small fees compound dramatically over decades. For example, Sarah, a 25-year-old teacher, invests $500 monthly into Vanguard's Total Stock Market Index Fund, VTSAX, with a 0.03% expense ratio. Instead of trying to pick winning stocks or hiring expensive financial advisors charging 1 to 2% annually, she simply buys the entire market. Over 30 years, this simple approach could save her over $100,000 in fees alone compared to actively managed funds, while historically delivering market returns of approximately 10% annually. 2. Spend less than you earn and invest the difference. Wealth building isn't about earning a massive salary. It's about creating a significant gap between income and expenses. Every dollar you don't spend is a dollar that can compound and work for you. The goal is to maximize your savings rate, the percentage of income you save and invest, rather than focusing solely on increasing income. A high savings rate accelerates your path to financial independence exponentially. For example, Mike earns $60,000 annually, but lives on $40,000 by avoiding lifestyle inflation, driving a reliable used car, cooking at home, and sharing housing costs. He invests the $20,000 difference, 33% savings rate, each year. Meanwhile, his colleague earning $100,000 but saving only $5,000 annually, 5% savings rate, will actually reach financial independence much later than Mike, despite earning significantly more. 3. Avoid debt, especially high-interest consumer debt. Debt is the enemy of wealth building because it forces you to pay interest instead of earning it. While some debt like mortgages can be acceptable due to low interest rates and tax benefits, consumer debt, credit cards, car loans, personal loans, typically carries high interest rates that exceed market returns. Eliminating high-interest debt should be your first priority, as paying off an 18% credit card debt is equivalent to earning an immediate 18% return on your money. For example, Jennifer has $15,000 in credit card debt at 22% interest while trying to invest in the stock market hoping for 10% returns. She realizes she's mathematically losing 12% annually by not paying off the debt first. She stops investing temporarily, throws every extra dollar at the credit card debt, and eliminates it in 18 months. Now debt-free, she redirects those monthly payments plus interest savings into her investment portfolio, dramatically accelerating her wealth building. 4. Stay the course through market volatility. The stock market will fluctuate dramatically over short periods, sometimes losing 20 to 50% of its value during bear markets. However, historically, the market has always recovered and continued growing over the long term. The key to wealth building is emotional discipline, continuing to invest regularly during market downturns when stocks are on sale, and not panicking and selling when markets crash. Time in the market beats timing the market. For example, during the 2008 financial crisis, Tom watched his $200,000 portfolio drop to $120,000. While his friends panic sold their investments, Tom continued his monthly $1,000 contributions, buying more shares at lower prices. When the market recovered by 2013, his disciplined approach during the downturn significantly boosted his returns. Those who sold during the crash and stayed out of the market missed the subsequent recovery and took years to rebuild their wealth. Tom's portfolio not only recovered, but grew substantially because he bought more shares when prices were low. So there you have it. J.L. Collins' simple path to wealth boiled down to 4 game-changing principles. Invest in low-cost index funds. Spend less than you earn. Eliminate debt. And stay the course through market storms. But here's what makes this book truly revolutionary. This isn't just about money, it's about buying back your freedom. Collins shows us that financial independence isn't reserved for the wealthy or the lucky. It's accessible to anyone willing to live below their means and invest the difference. The math is simple. Save 25 times your annual expenses, invested in index funds, and you can live off the returns forever. A teacher, a nurse, a mechanic, anyone can do this. Imagine waking up tomorrow knowing that your money is working harder for you than you work for it. Picture having the confidence to weather any economic storm because you understand that market crashes are actually opportunities to buy stocks on sale. This book doesn't just teach you to invest, it teaches you to think like the wealthy while living simply and purposefully. The people who follow Collins' advice aren't just building wealth, they're retiring decades early, switching to passion careers without worrying about salary, and sleeping peacefully knowing their financial future is secure. They've discovered that the path to riches isn't about earning more, timing markets, or finding the next hot stock. It's about mastering the fundamentals and letting time and compound interest work their magic. Here's your challenge. Start today. Open that investment account, automate your savings, and begin your journey to financial independence. Remember, the best time to plant a tree was 20 years ago, but the second best time is now. If this video opened your eyes to a simpler way of building wealth, hit that like button, subscribe for more life-changing book summaries, and share this with someone who needs to hear it. Your future self will thank you for taking action today, not tomorrow. The simple path to wealth is waiting. Will you take the first step?